welcome back to my channel. Don't forget to like, share, comment, and subscribe. Okay, I want to read some article by investing.com. The article from Herbert Les, Amanda Cooper, and Tommy Wilkes. New York or London readers. US and European stocks stumbled on Friday. The dollar scaled a 22-year hike and bonds sold off gains as fears grow that a central bank pres- prescription of raising interest rates to tame inflation will drag major economies into recession. The Dow narrowly missed, confirming a bear market as a deepening downturn in business activity across the Eurozone and US business activity contracting for a third straight month in September left Wall Street following Street deepening downturn in business activity across the Eurozone and US business activity contracting for a third straight month in September left Wall Street wallowing in a sea of red. The British currency and debt price weakened further after the UK government announced huge debt finance tax cuts that will boost borrowing, sending UK bond yields falling higher in their biggest daily increases in decades. The euro plummeted to a 20-year low and sterling to a 37-year low, while the dollar soared after the Federal Reserve this week signaled rates would be higher for longer. George Goncalves, head of U.S. macro strategy at MUFG, said the Fed wanted financial condition to tighten and hike interest rates were the mechanism to deliver a market investor had not seen for a long time. It's something we're not used to, that's why it's more surprising for most. He said it's going to be a long staring contest between the Fed and the markets. In the middle is the economy, which is not responding yet to this tightening. MSCI's World World Stock Index shot 2.07% to almost two-year lows. The Pan-European Stocks 900 index closed down 2.34% in biggest weekly loss in 3 months. On Wall Street, the Dow Jones Industrial Average fell 1.62%, the first major U.S. stock index to fall below its June trough on an intraday basis. But the blue chip index averted, confirming a bear market as it might miss it closing 20% or more lower than its record hike. According to a widely used definition, the S&P 500 and the Nasdaq Composite, already in bear market territory, fell 1.72% and 1.85% respectively. Britain, Sweden, Switzerland, Norway, and other countries also hike rates this week, but the Fed signal and its expect high U.S. rates to persist through 2020 sparked the rout in equity and both markets. Investors are trying to get a handle on inflation and how high rates will go, said Anzer Zech Skyba, head of Blue Bay US fixed income team at RBC Global Asset Management. Okay, maybe that's all from me. Don't forget to like, share, comment, and subscribe.